All right, Bulls and Bears, how you doing? I hope everyone is doing fantastic. Got a lot of news to cover today. Back with another dose of economic reality. Why do we say that? Because the perception out there is the economy's good. But as we talked about in our last video, most American people are confused. Remember that report and that study that we pulled up that showed how over 70% of people were confused on why they're having such a hard time, but the economy is supposed to be the strongest ever, right? With some of the lowest unemployment numbers, the growth, right, looking pretty good, not too bad. Folks, the growth is borrowed money. In fact, we're borrowing so much money now as a nation, the United States, we have to borrow money now just to pay interest on the debt, right? That's ridiculous, right? Let me say that again. We have to borrow money just to pay interest on the debt. Imagine your debt was so high. Imagine you had so much credit card debt. Not only could you not pay off the principal, you can't even pay off the interest. So you have to go borrow more money from some other, who knows where, to pay off the interest. I say who knows where because you can't do that. You can't just endlessly borrow money. Of course, the U.S. as a nation, we can continually borrow money because we can just create as much as we need because we're no longer on any sort of backed currency. It's all fiat currency. It's not backed by any commodity. Therefore, they can create as much as they want at the click of a mouse. So, of course, you're going to have runaway inflation. Now, you say, okay, well, it's been like that since the early 70s. Why are we seeing inflation get so much worse now? Well, now we've got the debt, right, exploding. And the only way to keep things operational is to throw more money at the problem. The whole problem started many, many years ago after the financial crisis. They dropped rates to rock bottom, and it caused people to go out and overpay for things because the more money people could borrow, the more they paid for homes, automobiles, the more money they spent in general, right? With all the banks loaning out all this money. And it's still happening today. Banks have not largely pulled back on the lending. It's a very small portion of banks, around 20%, that have actually tightened their lending. So there's the problem. And there's a lot more, but that's kind of the meat of the problem financially as far as what's going on right now, the cost of living. We're going to talk about a few things here that are a sign of the times here. We've got home prices took another leap here in California. In fact, we just hit a record high. We just surpassed the high that we saw last summer. The new statewide price now, which is a record $904,210. And this was an increase of 11.4% over last April. Where's all the people that said the housing bubble was going to go bust, right? And a lot of creators are doing that too. They're saying the bubble is busting. Folks, you might see some price decline somewhere, but until you cut off the way money is loaned out, this bubble is not going to bust. The 2008 housing bust happened because banks stopped lending, right? That's not happening today. It's completely different. Home prices could go up even higher. And I've been saying this for years, and a lot of people said I was crazy. People left the channel. They said, this guy's a loony. Home prices are so high. How can they go up even more? Folks, the reason they went up so high is the same reason they're going higher now. And until that stops, until that changes, the trajectory of home prices is likely not going to change. Yes, it's slowing down. The rate of increase is slowing down. And we're seeing some declines in some places. Look at Florida. Prices starting to go down there. But overall, folks, this is a very, very dangerous time because they're still keeping their foot on the gas. They're dropping fuel on the fire to keep these bubbles not just inflated, to inflate them even more. That's what they're trying to do. Most of the population though is so tapped out or so close to the financial edge that sales have plunged, but the people that are buying homes are still able to get financing. And remember, you also have the big buyers, you have the big money out there, the cash buyers, the institutions, the investors, still buying homes for cash, even at today's prices, right? So again, we're probably the only channel to give you the real situation on the housing market. It is sad though to see so many people out there fooling people, saying there's going to be a crash when they don't have any idea how the system of money actually works. But a lot of it's about just entertainment, about drawing attention and giving people hopium that everything's going to crash and be on sale, in the next few months, which I say again is not going to happen unless we see a big major shock something unfold, right? It could be 2020 2.0. Who knows? Another attack. The grid goes down. Who knows? Any of those big things can happen. So I always say be prepared. But outside of that, they're going to keep this thing propped up as long as possible. We've got also with the housing market, most of the non-bank lenders, actually the non-bank lenders are the biggest um, pushers or issuers of these government-backed loans, right? So they can keep on loaning out money. The FHFA is considering giving more financial firms, including non-bank mortgage lenders, access to $1.4 trillion of federal loan backing, right? So these non-bank lenders, there's no risk for them. They're loaning out. They're making these loans. They do the FHA loans, the VA loans, and others. There's no risk to them. They can loan out money for people to buy an overvalued home without worrying about any of their own bottom line, because these are government-backed loans. And again, back to what we said at the beginning of the video, the government, click of a mouse, can borrow as much money as they need to. So there's the problem, folks. There's the big picture that I don't think anyone else is telling you about, right? But that's what's happening. Jerome Powell is beginning to think its interest rate hikes may be having smaller effects than in the past. Oh, you think so? Because it's not just about interest rates, right? People were shocked and are shocked today that mortgage rates are where they're at, right? 7% area and even higher in some cases. People are shocked. People are shocked that the housing prices are not correcting at all in some areas and not more quickly in other areas, right? Why? Because it's not just about the mortgage rates. It's not just about interest rates. It's about the system of money, the way money's loaned out, how easy it is to access credit, how they can create money at the click of a mouse to issue all these loans or to back all these loans through the non-bank lenders. And it's a lot more complicated than that. If you're on this channel, you know all the ins and outs and the inner workings of the financial system, the way money's loaned out. It's not backed by anything. It's just digits on a screen. It's not backed by any commodity. So it's unlimited, right? Infinity. And I know to you, some of you, that sounds shocking, but that is the truth. Just look up the 1971 coming off the gold standard. Just type that in and you'll find out all about it. Well, we've got some of the biggest companies that survived over the past few years are now cutting prices. We've got Target and McDonald's. We talked about that in our last report with Target. Thousands of items being cut. Not very much. 50 cents here, 20 cents there, 80 cents there. McDonald's also bringing back a value meal. So the real big players in this are trying to get more market share by offering more affordable options. And they can afford to do it because, they are the companies that are just going to be the dominant ones after all not all, but a lot of the small businesses weren't able to survive over the past year. We've got plazas here in San Diego with all the businesses gone. At least two that I know of, all the businesses are gone out of these plazas. One I showed on a video, I think last year around there. Red Lobster, 99 restaurants closed in 28 states. And the seafood icon has been an icon for years. Chapter 11 bankruptcy. So they're not completely going away, but reorganization, including a lot of locations shutting down, auctioning off kitchen equipment on an online restaurant liquidator. So there you go. I guess it's not to do with the economy. I guess everybody just stopped eating seafood, right? So people that say, that has there's no sign there, that is not an indicator that the economy is not good. Well, what is it then? Is it just that, again, people stop liking seafood? I mean, please, please let me know what you think about that down in the comments. We've got the petroleum, jumping over to gas prices here. Petroleum reserve is being drained by the current administration in order to help keep gas prices from going higher. And we know what's happening this year. They want to keep everything looking good until at least November. Costco raising prices, unlike Target, unlike McDonald's. Many popular items at Costco, they're raising their prices, except we're still going to have the $1.50 hot dog and soda combo, right? I think that's the only thing they're keeping steady at $1.50, and that way they can point to that. No matter how high everything else is, no matter how high the prices are, they can at least point to that. Look, the prices aren't going up. Look at the hot dog and the soda. Because I've seen that in the news a lot over the past few years. So Could that be their strategy? That's going to be the one thing that doesn't go up in price. From what I hear, there's a couple other things on the food menu that aren't really going up in price. Let's talk about this. We've got food prices up an average 20.4% since January 2001. And let's see if we can bring this up here. And we're looking at the consumer price index here for food and beverages. And if you look, you see this huge run up. And it's a lot more if you really count all the different types of food that people buy, including takeout, etc. But this is just grocery prices for the most part, from what I understand. And it's a continuous climb. And they're telling us that things are getting better. Well, if you look towards the edge of the chart here, things have slowed down as far as the increase, but we're not seeing any drops. If you listen to the news, things are getting more affordable. Prices are crashing or dropping. If you're having trouble financially, then you just might be one of the outliers, because overall everything is getting better, getting easier. Not true at all, folks. Things are getting harder and more difficult, and that's why I still am urging people to keep an eye out and stay ready for some big impacts coming up here in the next few months. I think before the end of the year, it's got to happen, because consumers are too far in debt. We know that people are hitting the wall on their credit cards. 1 in 5 now are maxed out on their credit cards. So we're approaching, I think, some very, very turbulent times. And I think we're going to see a lot of big things play out here. We're going to be right on top of it for you, though. We're going to get through this together. Please make sure you're still subscribed. Come back for more updates. We'll see you on the next video. Everybody, big love. Keep stacking. Bye for now. Peace.